Hello everyone, how are you all? Welcome once again to my channel krishnasinghdeo. If you belong to Maharashtra State Board and आप class 12 में पहुंच चुके हैं, class 12 में आप BK पढ़ रहे हैं और class 11 में आपकी पढ़ाई बहुत अच्छे से नहीं हुई थी, तो chapter number 1 itself must be troubling you. Yes, this is final accounts of partnership. ये same chapter आप लोगों ने class 11 में किया हुआ है, जहां पर आपने final accounts of sole proprietorship देखा. So same adjustments, everything same, apart from few things like loan from the partner and partner's capital account and current account. These are new things. But the students who could not do because of some reason, the final accounts of sole proprietorship property must be facing problems. So I am here to solve all your problems related to first chapter of final accounts of partnership. So let's get started with this chapter, final accounts of partnerships. In this, there are certain adjustments which we will discuss in today's class. In previous two videos, I have already discussed Provision of Partnership Act 1932 and how to make partners capital account under fixed capital method and fluctuating capital method. If you have not yet watched those videos, please do go and watch over there. Those videos, they are going to be very, very helpful. Now let's get started with certain adjustments which are there in the partnership account when you are making final accounts of the partnership. Under these adjustments, we will take one by one each adjustment and discuss in detail. Then we will go to gradually some full length questions and see how these adjustments are dealt in the full length questions. So let's get started. Today I am going to share with you total 5 adjustments which are given as additional information below your trial balance. So what is the pattern of question? What kind of questions are asked? So you are given in almost 90% of the question will be like this. You will be given a trial balance and some additional information. By using the trial balance and the additional information, you will be required to create or make trading account, profit and loss account, and the balance sheet of the partnership. As well as along with this, you will have to prepare the partner's capital account and current account as the case may be. So the challenge is to take care of all the adjustments given over there. Rest all things are going to be simple, but the adjustments which are given over there, you will have to have a better understanding for that. So let's get started. Here is your adjustment number 1. Adjustment number 1 is very, very simple and most of the students can do it without any difficulty. This is closing stock. What about closing stock? Closing stock means at the end of the year on 21st of March, whenever the year is getting closed, at that time, what is the amount of stock which is lying in your warehouse. So this is called closing stock. This closing stock, since it is given in adjustment, will go to 2 places. There is a golden rule that whatever is given in the additional information or adjustment has to be posted at 2 places at least. It can go to 3 places also. 2 places at least means either it will go to profit and loss account and trading account, or profit and loss account and balance sheet, or balance sheet and trading account. So any kind of combination can be there, but at least 2 places it will go to. It can go up to 3 places also depending on the nature of adjustment given over there. So mostly we find this one as first adjustment. The closing stock is given to us in the adjustment or additional information. So whenever the closing stock is given in the additional information, how do we deal with it? So first thing what we have to do, we will take it to the trading account. And which side of the trading account? Trading account has 2 sides, debit side and credit side. So trading account is a nominal account, and on the nominal account, all the expenses and losses go to the debit side, and on the credit side, all the incomes and gain go. Income, why this closing stock is considered to be an income, and it goes to the asset side, credit side. Reason of this going to the credit side is this, because this closing stock will be sold later on and will fetch you the income. That is why it is written on the credit side of trading account. So trading account, you write it on the credit side. Now, what about the other treatment? The second treatment of this, it will go to the balance sheet. Under balance sheet, it will go to the asset side. What is closing stock? Closing stock is an asset. Which kind of asset? It is a current asset. That is why it will go to the balance sheet as well. Now, not only this is very simple type of adjustment where only the value of closing stock would be given. Sometimes they make it twisted and give you information in various other ways. What can be that way? Sometimes they give you the market value and the book value of the closing stock. Let's assume that the market value of closing stock is 50,000 and book value of closing stock is rupees 60,000. So first of all, understand what is market value and what is book value. So market value is that value which is the value of your stock in the market, and book value means on what value the stock is written in your books of accounts. Now, what do we have to do? Which value we are supposed to take when we are preparing closing? We are preparing final accounts and we are posting closing stock. So always the rule is whichever is lower, whether it is market value or book value, lowest of both we will take and we will put it. So in our case, the market value 50,000 is lower, so we will take this. So book value, or sometimes it is written as cost also, because it is not an asset, fixed asset. That is why depreciation is not deducted on this, and the word correct term is cost. So cost, or sometimes book value is also written. So whatever is written, you have to take lowest of this. So for example, if my market value was 70,000 and cost was 60,000, I would have taken this 60,000 as the value of my closing stock. Some more times it happens so that they give you the market value of the closing stock and they say that market value was up by 20%, 30% or so. So how do we deal with? For example, it was given like this, that the market value is rupees 1 lakh. And they say that this market value was 20% above the cost. If this is 20% above the cost, students, understand this itself is 120%. So how do I reach to the cost? I will have to take out 100% of it first, then I will have to deduct 20% from there to reach to the cost, because the rule is whatever is lower, either the cost or the market value, I have to write in the books of accounts the value of closing stock at that value, whichever is lower. So when this itself is 1 lakh rupees, how do we deal with this? We will assume, since this is 120%, we are going to divide it by 120%. When I divide it by 120%, I get or I can do it like this also, because it will give you the answer in points, which will make it difficult. 20 divided by 120. If I do with 20 divided by 120, it gives me the value of closing stock, which is up by how many rupees? Up by 16,660 rupees, 67 rupees. So this is how my value is inflated, and what I am going to do now, I will deduct this much of amount and I will show it in the balance sheet at the lower price, means 1 lakh minus 16,667. That amount, 1 lakh minus 16,667, 83,333. This amount I am going to show in the trial balance as well as in the balance sheet. So this is first adjustment, talking about the closing stock. Now what else can be given in additional information? Most of the time depreciation is also given in the additional information. How do we deal with depreciation? Depreciation is usually charged on the fixed asset, and except for the land, it is charged on all other fixed assets, which are tangible fixed assets. What are tangible fixed assets? Which has physical existence. So these kind of assets will have the value, and that value will be depreciated. What is depreciation? Depreciation is the reduction in the value of asset. So for example, land and building is given. So land and building, let's say the question is saying it has to be depreciated by 10%. Simply you will charge depreciation. Let's say the value of land and building is 50,000 rupees. Okay, and they say the charge depreciation at the rate of 10% per annum. Then in that case, 5,000 rupees is the amount of depreciation. Where two places I'm going to take it. Number one place, I'm going to write it in profit and loss account on the debit side because it is an expense for me or loss for me. So I'm going to write it on the debit side of profit and loss account. What will be the second effect? Second effect is on the asset side of the balance sheet, I will write land and building, and from the book value of land and building, I will deduct the amount of depreciation and then the final value, which is called net value of land and building, I will write in the outer column. So this is when the percentage of depreciation is given. Sometimes question will give you the information where they will not give you the percentage of depreciation. Instead of giving you the percentage of depreciation, they will give you directly the amount of depreciation. Those are easy type of adjustment where simply you have to deduct that amount of depreciation from the value of asset in the balance sheet, and the same amount will be posted on the debit side of profit and loss account. But this can be tricky also. Let's see how it is going to be tricky. For example, in your trial balance on the debit side, they have given you land and building. The value is written 50,000, and under bracket they give you some more information where they say land worth rupees or say building of rupees 10,000 was purchased on 1st October. Okay, and in the additional information they tell you rate of depreciation on land and building is 10%. Now, how are we going to deal with this? First of all, we will have to understand one thing. This 50,000 rupees was not from the beginning of the year. From 1st of April till 1st of October, the balance of land and building was 40,000 rupees. After that, 10,000 land or building, building is added, and then till the end of year, it became 50,000 rupees. Let me explain it to you with the help of timeline. So this is my timeline. My year is starting from 1st April and my year is ending on 31st of March. From 1st April till 1st of October, the value of land and building was 40,000 rupees. On 1st October, one addition of 10,000 was made in building. And then from here till here, the value of land and building was 50,000 rupees. Okay, so if I say this 40,000 rupees for the entire year was there, and the additional 10,000 was only from here to here, which is 10,000 here. Okay, I hope students you understood that 40,000 land and building was there for the throughout the year with us, whereas this 10,000 which was acquired on 1st of October was there only for 6 months. So obviously the rate of depreciation on 40,000 and 10,000 cannot be same on both. Why? Because one is used only for 6 months and one is used for the entire 12 months. So we will have to take on the proportionate depreciation on the land, on the building which is being acquired on 1st of October. So let's see how do we deal with it. So I am going to charge depreciation on rupees 40,000 at the rate of 10% for the full year. So this is going to be 4,000 rupees. But for 10,000 rupees, the building of 10,000 was acquired on 1st of October. So here I am going to charge depreciation at the rate of 10%, and I am going to take proportionate basis, means 6 months divided by 12 months. I am going to do half. So this is going to be 500 rupees. So my amount of depreciation is how much? My amount of depreciation is going to come as 4,500. So this kind of adjustment you have to be careful. You have to take into consideration the date of acquisition and the year-end date also. This could be July also. This could be January also. So accordingly, you will take the proportionate month. If any asset is acquired in July, then till the year-end, your number of months are going to be 9 months. If any asset is acquired in January, then you will take out the proportionate depreciation for 3 months. So students, you have to be careful over here. This depreciation adjustments can come in many ways and you have to deal with all of this. Now, next kind of adjustment which is usually given to you is outstanding expenses. What is outstanding expenses? Outstanding expenses mean any expense which was due to be paid but we have not yet paid. If any expense was due to be paid but we have not yet paid, this is called outstanding expense. And according to the matching concept, we are supposed to write this expense into the current year's account only. And what are we going to do? For example, rent. Rent is given to you in trial balance as 1800 rupees, and in additional information, they do say that outstanding rent is rupees 200. Then what will be the adjustment of this? Obviously, this will not require any adjustment. It will go directly to profit and loss account. But this, which is given in additional information, this requires the treatment at two places. So 200 rupees first adjustment is going to be in profit and loss account. You will add it along with rent. Okay, so 1800 rent you are writing. Plus you will make 200 and you will write in the outer column 2000 rupees. Okay, why I am adding it to rent? Because this expense was to be paid in the current year only. Along with the rent, it should have been paid, but we have not yet paid. So we are showing that, see, this 200 rupees is outstanding, but it belongs to the current year only. That is why we are writing in current year's profit and loss account only. Now, what is the second adjustment, second treatment of this adjustment? The second treatment of this adjustment is this. You are going to write it in the liability side. Under liability side of the balance sheet, you will write outstanding rent. Like this, you are going to show over there outstanding rent and the amount of rent 200 rupees in the liability side of the balance sheet you are going to write. So what do we do with the outstanding expenses? Two places. To which place it belongs to. If it is an expense which is to be returned in the trading account. For example, it is wages. So if it is wages, it will be written in the trading account. I would have written 1800 wages in the trading account and I would have added 200 rupees in the trading account itself. This is adjustment, the treatment 1 of adjustment, and treatment 2 is this 200 rupees has to be written on the liability side of balance sheet. Now let us move to the next type of adjustment. The next type of adjustments is related to your outstanding we have already dealt with. I am talking about the next type of adjustment is related with any kind of bad debts. This is further bad debts. What is further bad debt or new bad debt? In trial balance, you must be given some kind of bad debt. This can be there or may not be there also. Both kind of possibilities are there. But whatever bad debts is given in additional information. In additional information, if any bad debts is given, it has to go at two places. What two places it will go? Number one, it will be written in profit and loss account. Along with old bad debts, you will add and write. And second place, it is going to be written in the balance sheet, and it will be actually deducted from the amount of debtors. Okay, so two treatment of bad debt which is given in additional information. Number one, it will be added into old bad debts if there are bad debts given in trial balance. If no bad debts given in trial balance, then just like this, you are going to write bad debts in the profit and loss account. Which side of the profit and loss account? Debit side of the profit and loss account. And second adjustment is that you will write it in the asset side of the balance sheet, and under debtors you are going to write it, actually you are going to deduct it from the amount of debtors. Then next kind of adjustment could be prepaid expenses. What is prepaid expenses? Any prepaid expenses means if you have paid the expenses for the coming accounting period also, this is an expense belonging to the next accounting period. And if you have written in this year, it means it will reduce your profit. So what do? We deduct it. Though the cash has gone, but this expense does not belong to the current year. So for getting the correct profit, we deduct it from here. And the second treatment is that since we have given advance to someone, we will treat it as our asset and show it in the balance sheet on the asset side. For example, advertisement expenses. Advertisement expenses are paid in advance. Let's say each year's advertisement expense amount to 5,000 rupees and 10,000 rupees you have paid. So if you have paid advertisement expenses 10,000, so prepaid advertisement expenses are going to be 5,000 rupees. Now, what will be the treatment for this? First, profit and loss account, you will write advertisement expenses 10,000 rupees, and this prepaid you are going to deduct from there. Okay, this prepaid you are going to deduct from there. And second adjustment, what is going to be the second adjustment? Second adjustment will be on the asset side of the balance sheet. What will you write? You will write prepaid advertisement expense. Prepaid advertisement expense, like this you will show on the asset side of the balance sheet. So these are 5 adjustments, students, which I taught you today. I hope these adjustments are clear to you. You will revise this adjustment at home once again. You can replay the video at faster speed and see. In the coming videos, I will come with some more adjustment. I will explain a lot of adjustments over here, and then we may start doing the questions. I do not promise you to teach you all the questions which are given in your book, but yes, the trickiest one and which are the most difficult ones, I will pick up those questions and I will teach you all those questions over here. Lifetime solving we will do over here. Okay, till then, students, keep revising all of this, and yes, don't forget to subscribe to my channel, share the videos with your friends, and do like also, because if you motivate me, I will come up with more and more help for you people. And yes, you can download my app Krishna's Classes from Play Store. The link to download the app is given in the description box. So once you download the app, you can get access to amazing courses available for all the boards, and there are a lot of free study materials also. And students, there is one test coming on 5th of August for especially for Maharashtra State Board students, and this is a unique scholarship test. Description of this is given in my previous videos. Please do see that. And this test is a wonderful opportunity for all of you to get some freebies from our side. All 5 types of top scorers are going to get freebies from our side. Okay, students, so today only this much. We will meet once again, and in the coming video I am going to share with you some more adjustment. In each video I will try to cover 5 to 6 adjustments, so that whenever you want to revise, you can replay these videos and then you will move to the questions. Okay, bye.